Hello, everybody. We're all here in this room because we care about responsible digital finance ecosystems. So thank you for joining us today. Thank you to CFI. Also, thank you to IPA, who is a co-organizer with CGAP for this discussion. Today, we're going to discuss about how we can use data and evidence to foster more responsible digital finance services. So let me first introduce my colleagues who are joining me. We have William Blackman from IPA. We have Sheila Sanfuma from Consumers International. We have Sarah Corley from the Alliance of Digital Finance and FinTech Associations. And finally, we will soon have Kershia Singh, who is with the FSCA, the Financial Sector Conduct Authority of South Africa. My understanding is that in terms of participation, we would love you to participate throughout the event, but my understanding is that it's going to happen through the chat. So we'll monitor the chat. We will keep some time at the end also for Q&As. And we will start with a couple of presentations that are very short, 3 slides each for William and myself. And then we'll kick off the panel. So, Willie, I'll let you share your screen, if that's okay.
Excellent. Thank you, Eric. And I think you can see my screen now, I hope.
Yes.
Wonderful.
Perfect.
Well, great. I will, as Eric said, keep this brief because I'm quite excited about the panel discussion to come, but I will provide a bit of a background evidence that IPA has generated on the types of consumer risks that we're seeing in our work. So IPA conducts surveys of digital finance users to understand new and emerging risks that consumers face. I'll spend a few minutes talking about 4 key types of risks that we've identified using results from our survey of Kenyan consumers conducted in 2020 as a starting point, and then I'll go into a bit more depth from other sources that we've used. We've also conducted surveys in Bangladesh, Uganda, and Nigeria, and a second round of survey data from Nigeria will be published quite shortly. In the coming year, we'll have even more survey data from approximately 10 countries next year. So here I'm displaying the most commonly reported challenges consumers reported to us in this Kenyan survey that we conducted. So in terms of our 4 topic areas that are of greatest concern to us, first we have transparency. Without accessible and easily comprehensible information on prices and product information, consumers are unable to make informed choices about the financial services they use. So here in Kenya, we see that 11% of consumers experienced unexpected or unclear charges. The second issue is fraud. So as digital financial service providers become more widespread, so too does the fraud that's perpetrated across these digital channels. In Kenya, we see 56% of consumers reported being exposed to scams in the last year. The third issue relates to debt. While digital credit has the potential to be a very useful tool for consumers as they manage their finances, quick and frictionless access to this credit can often be, which is often accompanied by high fees and interest, can lead consumers to borrow beyond their ability to repay. In Kenya, we see that 23% of consumers report being denied access to loans, but even those that do access credit, okay, so so in Kenya, we see that 23% of consumers are being denied access to a loan, but we also see that of those that do access digital credit, 52% of borrowers report reducing food expenditures to repay a loan, which is quite concerning. Finally, complaints redress. When consumers do experience challenges, they need an accessible way to lodge complaints, and those complaints need to be addressed effectively. In Kenya, we see that 17% of consumers report experiencing poor quality of customer care, and another 17% report not being able to reach customer care at all. So I'll talk through a few more market monitoring examples from IPA and then turn it over to our panel, or to Eric, and then our panel. So starting off with transparency and starting in Nigeria, we conducted an audit of 29 of Nigeria's leading digital payment providers. We checked providers' websites for pricing information, and we opened accounts with each provider and carried out nearly 1,000 real transactions, carefully measuring all the fees that were incurred. What we found was pretty concerning. Only 2 of the 29 providers' websites that we checked had pricing information. And when we compared the transaction fees that we incurred in our real transactions with the price caps set by the regulator, 11% of our transactions had fees in excess of the cap. Sticking in Nigeria, but moving on to fraud, we scraped millions of posts on social media data from Twitter, now X, Facebook, and the Google Play Store to identify trends in the types of issues that consumers are facing. We found a massive increase in complaints about fraud after the outbreak of COVID-19, as you can see here, driven primarily by women. And now moving back to Kenya and to debt and the debt stress associated with that, we worked with the Competition Authority of Kenya, again, collecting millions of transaction records this time from digital credit providers to understand their consumers' borrowing and repayment behaviors. Among many other insights, we found that many of the same consumers will borrow from multiple providers simultaneously, which is possible because digital credit providers were not linked to a credit reference bureau. And this could lead clearly to unsustainable overborrowing. Finally, moving on to Uganda and to complaints redress. We worked with the Uganda Communications Commission to analyze millions of complaints logged by customer care representatives. We find that women are significantly less likely to make use of formal complaints channels. You see that 45% of subscribers, mobile money subscribers, are female, yet only 35% of complaints are lodged by women. We can also draw quite rich insights from the customer care logs, for example, noting how resolution times can vary quite significantly by the channel through which consumers lodge complaints. I will now pass it over to Eric.
Just to complement what Willie has just said, the reason why we need to step up financial consumer protection is because globally we're seeing that fraud, data misuse, and lack of transparency is increasing globally. We also have conducted national surveys in the WEMU region that also very much show significant percentages of people who are facing consumer issues of this kind, in particular in the area of fraud, in Côte d'Ivoire, Senegal, and Burkina Faso. I would say between 60 and 90% of DFS users have faced problems. So we think that it's absolutely essential. It's absolutely essential to have this data so that we can take action. Let's go to the next slide. So we have here what we call the key components of a responsible digital finance ecosystem. This is a conceptual framework we've just published at CGAP, which is aiming at stepping up financial consumer protection. And we believe that there are 4 key ingredients for that, including customer centricity, but also collaboration, capability, and commitment. I'm not going to go in depth for all this, but just wanted to highlight that how it relates with today's topic, because if we want a customer-centric, responsible digital finance ecosystem, we need to make sure that we have good market monitoring. So yes, if we go to this slide, thank you, Willie. What we're seeing is that we have made progress in Côte d'Ivoire. We did a first national survey in 2022, And we repeated this survey in 2024 after we helped the local ecosystem digital finance actors to take action. And I put a couple of examples of actions taken since 2022. And in 2024, we repeated this survey, and we are seeing some significant progress, even though the situation is not so great. So I'm not going to go into all the details, but it is to show the power of having data and how it can trigger action in a specific country, and ultimately help improve the situation. Without this data, I don't think any of this progress would have been made, because nobody would have known exactly what's wrong in the market. So let's move to the panel discussion now. I'm going to ask my first question to Sheila. And Consumers International, which you represent today, has been very much active in collecting data globally through all your members. But if we go at the country level, what do you see as the role of consumer associations in providing data on consumer experience? And given that we all know that consumer associations have relatively limited resources, what do you see as low-hanging fruits in terms of data collection tools?
Thank you, Eric. I think in terms of data generated, we generate data from lots of consumer associations around the world, across Asia, Africa, Latin America, but it's always the interesting, unique cases that come straight to home. So I'll use an example from Uganda. Over time, we've seen consumers complain across various issues. But like Willie did say, usually we realize that we are getting complaints from a certain demographic, which usually for providers, that indicates that maybe one other demographic is happy. Yet, in fact, it means that they're either unhappy or they have issues with accessing the complaints mechanisms in place. So within the consumer associations, most of the data is collected as consumer complaints. And this is usually via traditional means, whether it's going out to the field or through their websites where someone logs a complaint. But we're also seeing a lot of innovation around leveraging social media to analyze data, whether they're using keywords or trying to understand what are the quickest ways that they feel that businesses or providers will be able to respond. So one of the interesting cases was with Uganda, the Consumer Association's consent was getting a lot of feedback. They would go out in the field to gather information on agriculture. They would come back with information on literally everything, including finance. So with that, they compiled a series of over 600 complaints from the northern part of the country, the central and the west. And they took this to the UCC, which is the Uganda Communications Commission, to say, look, this is what we are seeing in the field. These are complaints that are not coming out. So UCC, which also gets data from telcos that provide mobile money services, use that as a validation mechanism to see if this actually aligns with what the providers are sharing. And they realized that there was a lag in terms of the kinds of complaints coming through for various groups of consumers, whether it's rural consumers vis-a-vis the urban consumers, vis-a-vis those who actually have more access to complaints mechanisms that are already in place. So with that, the UCC is now actually doing roadshows in collaboration with the consumer body, in collaboration with Airtel and MTN and the regulators themselves, going out of the office to actually go to the field to see what mechanisms can they put in place or leverage to ensure that they're getting data that's comprehensive and not just targeted to a particular type of consumer. And this has been a great movement for us, seeing that the consumer associations, like you did mention, have very low resources. So a key part is to see how can they collaborate with those with resources to ensure that we are all meeting the ultimate goal that we want to see around ensuring that digital financial services are actually leading to better outcomes for consumers. And just to note as well, one other trend we are seeing around leveraging the limited resources is using technology. And that is technology, whether it's social media, like I mentioned, or even updating the websites of the different consumer associations to provide an option for complaints through the website instead of going out to the field. So those different mechanisms all help to ensure that we are collecting the right data, that we are including all consumers, and that the feedback that we use, we actually communicate it to the right authorities or providers or stakeholders in the market to collectively come up with solutions. I'll pause there for now in case of time.
Yes, thank you very much. Well, just one clarification question, Sheila, on your story. The use of social media, this is something very interesting. Do you find that it captures the voice of, all kinds of users, or is there a risk that, we're only hearing the voice from certain users?
I think there is a risk that we are only using it. We are capturing particular types of consumers, particularly those with smartphones, for one, who can actually access data, especially if we are looking at countries where data is expensive. So there is that as well. But on another hand as well, it's an opportunity to actually be heard, because most of our consumers feel like if they go through the normal channels, they don't get as much response. However, by going on social media, it means that if I come as Sheila with one complaint, there'll be like 50 other people who are coming to say, oh, I've experienced the same, and then it will be 100. And then there is value in that one voice creating scale. And because of that, then providers or regulators are usually quick to act. Like we did see as well with digital lending apps, someone kept complaining, listing the apps, and the Uganda Microfinance Regulatory Authority finally came up, the central bank came up and said, this is something under the Uganda Microfinance Regulatory Authority. The authority came up to say, okay, we realize that this is an issue. These are the apps which are fraudulent. This is a helpline we've put in place to help people. So you realize that in terms of scale, it helps, and it ensures that even as these solutions are put in place, ultimately they also help the consumers who are not able to use social media to complain in the first place. So that one person who could access the right channels led to a movement that actually helped everyone within the ecosystem. I don't know if that helps.
Yeah, no, that's really very interesting. Thank you very much. Let's go to Sarah. If you had a magic wand, what type of data would you want your members to get to develop more responsible digital finance services?
Thanks so much, Eric, for the question. And, I think there's a couple of things here to unpick. So firstly, sometimes there already is a lot of data, but that data might be out of date. It might be in 3, 4, 5 different places. And like sort of Sheila mentioned, unfortunately, whether it's a consumer association or often a fintech or finance association, they're often under-resourced and can't find or don't have the time or the resource to be able to find all of those sources and bring it into one place. So I think the work that Willie shared about and IPA, if you're in Kenya, Bangladesh, Uganda, or Nigeria, you are getting that magic wand in many ways already and starting to have the insights. So I would love to see more countries having that kind of insight. But also I think breaking it down a little bit more so we can understand really, what are the key pain points, so that we can then have some sort of focus around which thing needs to be tackled most quickly and urgently in market. And trying to also figure out, I think it was really helpful, that the sort of the report that Sheila was referring to, because it clearly indicated, a couple of providers that had some space to perhaps work on their processes and practices. So understanding, where is the biggest pain point? Often that's lending in the market as well, but it can be simply just payments. So being able to find and access that data, both qualitative and quantitative, because often sometimes there's nothing more than a story of the impact of one person losing funds or, being scammed or, not understanding a product and service that actually can sometimes hit the heart perhaps more than figures do. And we all learn and process things differently. So, I think that would be the magic wand, to try and find insights that are specific to that particular market. That actually can result in actionable insights that industry associations can take and can also try and, push that agenda with its members as well. And also perhaps raise it with the early fintech, startups in their environment to make sure that it's addressed in this issue before they even go live into market in a bigger way. So that would be my magic wand that I would wish for.
Thank you very much. Our colleague Kershia from FSCA has some technical issue, so I don't know if she will be able to join. But let's go to Willy. Willy, we've been talking about different kinds of tools that we can use to monitor risks, understand risks, and also coming back to Sarah's point about the mix of quantitative and qualitative surveys. I'm curious to hear about some of the tools that have not been yet mentioned.
Yeah, absolutely. And at IPA, we're all about the quantitative. So I think most of what I'll talk about is quantitative, though that's not to say that the qualitative is not important. It's just sort of not our expertise. So I've mentioned a number already, and of course, surveys are super important and critical for our work. And as I mentioned, we're going to be expanding that to 10 countries and are quite excited about that. But I want to focus on some more maybe cutting edge solutions that we're working on that leverage emerging technologies to offer new insights. And some of these I've touched on before, but I'll explain in a bit more depth. So we've used like natural language processing and predictive modeling to try to make sense of different types of unstructured data. So this could include social media posts, similar to what Sheila was discussing before, and consumer complaints logs, as I mentioned before, also with the UCC in Uganda, similar to Sheila. So one other example of making use of unstructured data is working with researchers. We scraped app review data from the Google Play Store on a large range of digital credit apps across many different markets, and built a machine learning algorithm to identify likely fraudulent or predatory apps. We know this is a common problem, and trying to create an automated solution that can detect these apps quickly before they gain prominence is important. As I mentioned before, we've also collected unstructured complaints data in Uganda. We also used predictive modeling on that complaints data to identify consumer characteristics that are associated with particular types of complaints. And these sorts of insights can be used in conjunction with generative AI tools to create individually tailored messaging to consumers about issues such as anti-fraud education or complaints redress processes. On the topic of generative AI, one other thing worth mentioning are chatbots, which are, of course, quickly becoming much more powerful and easy to interact with as they incorporate large language models. And these chatbots can be used by providers and by regulators to field questions and complaints from consumers. And clearly, these tools can help to improve and expand access to the complaints redress process for consumers, but they also generate data which can be really useful for market monitoring, which is something that we've done in the Philippines with the central bank there that runs their own chatbot, Bob, and we've analyzed some of the data that they've generated. Finally, we're working to automate the process of scanning financial service providers' websites and scraping pricing information. I think my video has just died. I don't know why. We're scraping pricing information if available, and standardizing the prices that we scrape to allow regulators and researchers and even consumers themselves to compare prices for financial services across providers within the same market and also across markets. So these are just a few sort of examples of the more the use of emerging technologies to help regulators and others in the field sort of monitor for these types of consumer risks.
Very good. Thank you, Willy. And just from CGAP's side, some of the tools you have mentioned, we have also tested, in particular, the use of AI to analyze social media. And interestingly, we did this with the RBI Innovation Hub in India over a 2-year period, which was really fascinating. And not only did it give us a lot of information about the consumer's experience, and the urgency sometimes of the issues, but it also provided information on the sort of wrongdoing apps. So we could actually come up with a list of wrongdoing apps pretty easily, which is quite powerful. I mean, there are also a lot of non-high-tech, phone surveys, in-person surveys that obviously are still really critical if we want to reach the entire, population. And also, just coming back on Sarah, I think this notion of, qualitative data is actually also important, because just to give you an example, in Côte d'Ivoire, with a national survey on digital credit, we found that close to more than 70% of users were not repaying on time. And we couldn't really understand why. So we needed to do that extra, qualitative analysis with focus groups and, things like that, and individual interviews to better understand the different profiles of digital credit borrowers and different behaviors. So it is also interesting, I think, to get into qualitative to complement some of the quantitatives. Not always, but sometimes it's actually really useful. Anything else on the tools that Sheila or Sarah would like to add?
I think just for me, I'd love to sort of see more usage of the tools. And I think that's something that, us as a kind of global hub of fintech associations and digital finance associations, we'd love to be able to provide our members with more access and using those. So I'd be really excited to try and champion that more. I think it would be an important way. One of the examples that I'm going to give, a lot of it was done manually by humans, and actually if we can do it now, using AI and these amazing tools out there quickly and rapidly, then the resource challenge that many associations have, which I'm sure Sheila's team would also be lovely to explore, that takes away some of the burden, which is really exciting. So thank you for sharing this with us, Willie.
Yeah, I think on our side as well, would like to see more of the tools used across the ecosystem, because like I did say, the regulators are collecting data, the providers are collecting data, the consumer associations have their own data, and in a way, one way or another, different people are reaching different kinds of consumers. So if there is a way that the different stakeholders can leverage some of the technology, like the APIs, etc., to see how they can all have access to data and have one dashboard where like a mandated body can actually see what's really happening. In this case, it would be really the regulators. Then that will be very helpful, because then you have a clearer picture of data and complaints from different kinds of consumers, but also you're more readily able to see trends as they arise. If today a particular issue is at 5% and next week it's at 15%, then there is something definitely going wrong. And the only way you can do that is if you're getting data from all corners and not just from a certain group. Otherwise, usually things escalate, and by the time they do, we've already lost the opportunity. So it's mainly how we're trying to leverage all these tools within the ecosystem and ensure that we're all speaking to each other and that we're getting the right information at the right time. So I think for me, that would be the big issue for us. And also another that keeps coming out is really around regional cross-border data sharing, as we see the same issues coming up in different countries and even in different continents, but the same similar issues. So I feel like the issue of cross-border collaboration would also be really useful in terms of tools that are effective.
Thank you. Excellent. One thing I want to add before we move to the, taking action based on evidence and data is the fact that these tools, some of them are inexpensive, but some of them are quite expensive to run. So I think, I saw the registration list, and we have a lot of funders in the room. And, this is the kind of thing that is really useful to fund, either through, consumer associations or industry associations or the like of IPA. So just to say that this is an area where there is not enough resources, and consumer protection is usually not, the best endowed sort of, domain. So it's fantastic to hear, that IPA is going to conduct 10 more of these national surveys, for example. We're going to do 2 more of these, so I think we'll have 16 or something national surveys soon, but it's still not enough. We need more data of all kinds and more resources. So let's move to, how do we use all this information? And Sheila, you told us already a story, I think in Uganda, about how the data was actually used. Do you have other stories you want to tell us, or continue on the Uganda story about consumer association successfully using consumer data to trigger some change in the DFS ecosystem?
Yes, I have lots of stories, Eric. We could stay here the whole evening if we had to go through all of them. But I'll just use another example for now, just to show that these are things happening within different places in the world, and that consumer associations are actually not seated despite the limited resources. And for us, one of the other examples that we've seen that really, really speaks to most of our network globally has been from the Consumer Council of Fiji. They receive lots and lots of complaints across the country, but also on different issues. But one was very particular because they received over 931 complaints, particularly on scams. And this was a scam that was called the eBay shop online recruitment scam. So someone would reach out to say, oh, you can download this app, you shop and get cash back up to, a certain amount that you've shopped. And then when different consumers would do that, they would be told that, oh, you have to spend more to get the cash back. So they kept doing the same thing. And of course, they wouldn't get any refunds. So it turned out that this was actually a fraudulent company. It wasn't tied to eBay at all. After the Consumer Association reached out to eBay and other shopping platforms that these scammers were trying to impersonate. And with that, it shared these complaints with the regulators in Fiji, told them this is what we are seeing, this is the trend, this is how much money has been spent. There was about $1.7 million already from the 931 complaints that they had received that had been spent as part of the scam. So with that, there was a task force that was put in place by the Reserve Bank of Fiji, and the task force was particularly a scam task force. And this was composed of the Ministry of Trade and Cooperatives for Small and Medium Enterprises, the Regulator for Communications, the Reserve Bank of Fiji, the Fiji Police Force. This is someone we usually leave out when you're looking at stakeholders, the police. But the task force involved the police as well. It involved the Fijian Competition and Consumer Commission and the Consumer Council of Fiji. And with that, they've been meeting regularly to see how they can track this. And not only have they now managed to be able to shut down some of those websites that were leading in the scam, but also they're meeting regularly to see how they can strengthen legislations in order to avoid such scams from occurring. As we speak, they've now received over 1,700 complaints valued to about $3.6 million, all spent on just that one particular type of scam. And there is a fear that even with that, there are lots of consumers who haven't complained, either because they are ashamed or they are not using the right frameworks. And what they see as well is that these are things that are repeating themselves, because we are seeing other countries also in Asia that are reporting similar kinds of things, where they tell you download this via Telegram, and you realize that Telegram is promising, confidentiality and safety, but also then it's being utilized, or fraudsters are taking advantage of it to see how they can defraud you without having a way for you to report or to track. So we are seeing a lot of this, but it's nice to see also that there are governments that are very proactive. And within even that task force, I mentioned that initially it had just the regulators, but right now we've also heard from the member in Fiji that they've onboarded businesses, particularly Vodafone Fiji, to be part of the task force to ensure that the businesses through which sometimes consumers make payments can also be engaged or can be able to best track when they're seeing suspicious movement within their work. So for us, this is a clear-cut case of the different stakeholders, sometimes the unexpected, that you can engage within the ecosystem to ensure that we are proactively and promptly coming up with solutions to ensure better outcomes for consumers, whether it's around loss, whether it's around reputation, whether it's around just ensuring that we are filling in some of the gaps that make it hard for some consumers to complain or to come forward when they see or experience harm. I'll pause there, Eric, but happy to keep building onto that.
Thank you, Sheila. No, this is another great story, and I hope it's available publicly, or will be available publicly, because we need more stories like this of extraordinary collaboration among so many actors in the ecosystem. But it's going to take this kind of, this kind of measure if we want to fight against very fast-growing risks. And we talked a lot about AI as a solution, but the fast arrival of deepfake is very much likely going to create an exponential growth of ID theft and frauds. So I'm actually quite worried about what's coming up, but also excited that we're all working on finding solutions. Sarah, can you tell us some stories of actions that your members have taken to make DFS more responsible? And just to give some background, I think that it is absolutely critical to have industry associations like the ones that are gathered in Sarah's alliance, because they can play such a big role in promoting responsible digital finance. So, Sarah, do you have some examples you can give us?
I have a lot, but like Sheila said, I could probably be here all night as well, giving those examples, because although, often when you think of, financial services providers, you do wonder sometimes whether consumer protection, is something that people are interested in. And well, I'm just really delighted to say that this is a conversation that comes up and that we've been talking about a lot amongst the fintech associations. They are really, really keen to do work in this area to make finance responsible, fair, and transparent. And what I love is, I've got examples from both Africa and Asia, because just as Sheila said, the scams do replicate, and often best practice can be shared, which is really, makes it sort of really valuable for us to have this global focus in the work we're doing. So let me start in Botswana. The FinTech Association of Botswana are building a website, which they're going to call the Scam Radar, which is where consumers can verify businesses, report scams, and access a range of resources to help users to identify common scams and avoid falling victim. And they're able to do that because they won one of the small grant awards that we were able to offer this year to our members to work on particular issues in their country. So I'm excited to see that website will go live later this year, early next year. Crossing back across the water towards the Philippines. FinTech Alliance Philippines pioneered a campaign that was focused particularly on risks and threats associated with cyber fraud, phishing scams, and identity theft. And they did that in collaboration with the central bank, and in particular, the governor was very involved in that campaign, which shows great collaboration and genuine need to work together to solve this issue. The association in Philippines and also FinTech Association for Consumer Empowerment and many others in our membership, but flagging those two in particular, have industry codes of conduct, which absolutely within that code of conduct includes promoting fair and transparent practices and also consumer protection. And the FinTech Association for Consumer Empowerment, which I'm going to call FACE, their abbreviation just for ease. It's a lot of words for me to trip over there. So FACE, in fact, was awarded, and the first FinTech association to be awarded self-regulatory organization status, SRO status, by the Reserve Bank of India. So they now have a clearer and stronger mandate to manage conduct of the industry, which also includes customer grievances and disputes. So they will have much clearer access to a lot of that data and information and can play a really important role in protecting consumers. They also did a really interesting product, and maybe they could have used IPA's tool, but they manually went through the Google Play Store and reported many of the illegal lending apps there. That partnership with Google removed 700. I mean, it's an unbelievable amount. I was staggered when I heard, but 700 illegal apps. We're not even talking about ones that don't do things very well. These were the ones that were actually illegal and should not have been available to consumers to use in the first place. So they are now providing that market intelligence to Google and helping, stopping the apps from even getting on the store in the first place now. And they're also providing input to the Reserve Bank Innovation Hub to identify which of the apps now are malicious. So maybe not so much illegal, but actually have malicious and inappropriate practices. One of the things I really want to raise as well is we have our very first annual Digital Finance and FinTech Association Awards, trying to champion the work that these amazing industry associations are doing. And in fact, one of the key categories, there were 6 categories chosen, and one of those key categories is to figure out which associations are championing best practices when it comes to implementation of activities around consumer protection. So we'll start to collect that evidence, just as Sheila's been doing, of what industry associations are doing and what impact they're having in their markets and who they're collaborating with. Because, I think as we've all said, this is not a problem that can be solved by one entity. This is about collaborating together, sharing data, taking one action together to beat these fraudsters who also have access to the same technology and information that we do. So we need to try and be one step ahead of them.
Fantastic. And I can't wait to see the results of this. What is it? Is it a competition you're organizing?
Well, we're looking for judges, Eric, so we'll come to you and see if you want to help us pick them.
Okay, very good. No, I think it's very interesting. The case of FACE in particular in India is quite well known. Globally, they've been very active, and we've heard a lot about India and the digital credit apps issues. It makes me think about incentives for providers to become more responsible in their delivery of financial services. And I think the notion of reputation is actually quite important here, because in the case of FACE, obviously there are some very good digital credit providers, but they were getting heavily affected by the bad reputation of digital credit, given all the unregulated and unwanted sort of digital credit apps that were in the market.
Indeed, Eric, that was the very reason FACE was formed. So if you go back in the history, that is actually the total reason why the few people got together to form FACE in the first place.
Very good. I'm going to ask for people to write their comments or questions in the chat. I can't see the chat for some reason, but please, write down your questions in the chat, and hopefully we will receive some of these. And Willie will just signal to me because I can't see them. But we can continue until we see questions. And Sheila, you have so many stories. Do you have any other success story to tell us on the use of data for making change happen?
Yes, Eric. Like I did say, I'm all full of stories. I think the other one that we're seeing is really around vulnerable consumers. So within the FAIR Digital Finance Accelerator, which is a program within low and middle income countries funded by Gates, where we collaborate with CIGA, we're mainly trying to see how do we work with regulators and providers and the ecosystem broadly to come up with consumer-centric policies and solutions. Including, of course, with providers as well. As Sarah may tell you, we are collaborating with them, and also with other key think tanks and researchers like IPA. We're trying to see how do we come up, how we're reaching all sorts of consumers. And with that, we do have a project under the accelerator that's being carried out by Cardiff in Nigeria, whereby they're looking to see what are the issues that people with vulnerable populations are facing, particularly people who are hearing and visually impaired. So one of the feedback they were hearing before from their complaints was that some of the consumers who are hearing or visually impaired are taken advantage of, sometimes even by their immediate relatives. So they try to see how can they ensure that there are frameworks in place to protect them without them losing out on the ecosystem that sometimes makes it hard for anyone who's excluded to sufficiently interact. So they've been having a series of research with people with disabilities, working with amalgamating bodies, but also with providers and stakeholders to see what are the issues that people with such disabilities are facing, but also what can be done to ensure that they can effectively also be part of the ecosystem. And with that, they've come out with preliminary research that will be shared towards the end of November to understand the issues that such populations are facing, but also are now working together with industry bodies and the regulators to see what solutions can be put in place And some of them are even as simple as trying to say that, okay, we want a WhatsApp group where we can communicate when we have issues, to things like we don't have access to this particular thing, or to other access issues, especially around the cost of the infrastructure that they need to be able to access the ecosystem. You'll find that most of the solutions in place are extremely expensive, yet the mechanisms put in place require them to actually engage with, let's say, the phone, or with mobile money, or with banking, and there are no mechanisms in place for them to sufficiently engage. So what we are seeing is more collaboration, even where it comes to more complicated or issues where we think have been resolved, like access. People still don't have sufficient access. So we're trying to see how engaging everyone. We're not leaving everyone behind. Who is best placed to help? And when you mentioned that we have funders on call, I was very happy, because there are a group of stakeholders that usually, when we speak about the ecosystem, we don't give as much attention, yet they play a very crucial role in ensuring that they're finding the right projects, whether it's civil society, whether it's businesses, whether it's governments, to ensure that the right frameworks are put in place that will further financial inclusion and ensure that we're not losing out on some of the progress that we've made before. So I would say that for us, we're seeing a lot, and every story is different, but ultimately it contributes to peer-to-peer learning within the ecosystem and within our network. And we're seeing some of these replicated.
Thank you, Sheila. Unless, Willie, you will interrupt in case you see something. But, I just wanted to follow up on Sheila's comments about, vulnerable consumers. And one thing, of course, that we are trying to identify through all this data is gender disaggregated data. And I think it's important to discuss this, because the situation, the more we find out, the more I think that the situation seems complicated to me. We had assumed that we would see a big gender gap in our three, WEMU national surveys in terms of exposure to risks. We did not find a very significant gap, but national surveys gave us a lot of very interesting information about the difference in terms of, the issues faced by women compared with men. So interestingly, the solution will not be the same in some cases for men and for women, even if, overall, women were not as, there was not so much gap, as I said. I'm curious to hear from Willie, because this is an issue we've discussed in the past, but has there been any, interesting information you have found about women in particular in your surveys that could trigger some actions? One thing we found, for example, was that there were, more issues of probably digital capability among women. But at the same time, they would ask for more advice, which would compensate for that. But still, there is an issue at the basis, in terms of digital capability. So, Willie, anything that you found in your surveys on this front that could be useful?
Yeah, thanks for raising this, because just to start things off, we found something quite similar to what you've mentioned. In fact, even if you squint your eyes a bit, what you see is likely that that men are reporting greater challenges than women on a lot of different dimensions, which is perhaps counterintuitive. But the key word there is reporting. We don't have a lot of strong evidence to back this up, but you may remember that I presented at the beginning of this session about the level of complaints that are submitted to financial service providers by men and women, and we see that there's this pretty dramatic difference. Women are less likely to report complaints as well, and so you see the same pattern that women are not reporting issues to our survey enumerators, and they're not reporting it to financial service providers. Now, does that mean that women are less likely, actually less exposed to consumer protection issues, or is this an issue of agency and self-efficacy, where there's been some work that we've been involved with? There was a small study that we did in in India that looked at differences in self-efficacy and how that influences women's desire to submit complaints to their financial service provider. And so a theory that we may have is that our survey data is biased in this way. That women are maybe equally exposed or even more exposed to risks, but are not willing to report those to our enumerators. And so that's why we are pushing, one thing that seems like a through line throughout this conversation is the need for multiple data sources. And I think this is a case where that's definitely true. One thing that we've also done, I don't have great evidence to point out right now, but that we've done is mystery shopping, where we send men and women, trained enumerators to run, transactions with agents, for example, and look at rates of overcharging or other agent misconduct. And that's a great way to look at potential gender differences in a way that deals with this potential, reporting bias that we expect may be there in survey data. So I think the broader point is that we always need to be, thinking about the potential limitations in terms of the set of individuals that are included in a data set, but also potential reporting biases that may be present, and try to pull in sources of information from different data sources to sort of, identify and close those gaps.
Thank you very much. So I see we have a question in the chat, which is about who is responsible for data collection, such as through mystery shopping or social media analytics. I think, maybe I can start on this, but actually, Sheila or Sarah, feel free to jump in first, actually, since you're the guest.
Well, I'm going to take the opportunity. I'll jump in there, because I think this is a perfect opportunity where industry associations, perhaps also in conjunction with the consumer associations, could take a really strong role here. I think, but under a mandate, perhaps sort of from the regulator as well, so that there is clear accountability and responsibility and where that data is going to go and how that data is going to be used. But I think so industry associations, are really, potentially a really great advocates, for this, and would be able to collect that data and not only inform the regulator, but then actually have the ability to network and socialize and get working groups going from amongst its members, and try and get its members to take some of the data, the challenges, the issues seriously, and make changes, are not just at policy level, they're also at industry level. And so if it just sits with the regulator, which, that data just sits with them, it also is missing, the industry, who could then perhaps come up with their own innovations or solutions, or perhaps even understand the data, differently. So, for me, associations are, of course, I'm going to champion them, but I think they sit in a really unique position where they engage with a number of different stakeholders and can bring, really thoughtful working groups and opinions and ideas together that can actually foster that change that we need.
Yes, on our side, I think we could go around and we could champion for the different players. But I think for us, when we look at the regulator, it's mainly acting as the host, because usually it's the regulator who has foresight or the power to be able to influence all the different players. If there is a consumer association and they have all the capability, usually there will be an issue of mandate. But I feel like with the regulators, they have some flexibility in terms of control, first of all, or oversight over a series of players within the ecosystem, but they're also they're taken more seriously, or they're respected more sometimes given their status. But I would say that it's critical that the different players find a way to contribute towards the data, but ultimately someone has to be the primary host. And for us, we still feel the regulator could be that. And then all of us, we feed into that, because like I did say, we all generate different data at different points, and we're bound to miss out on each other's advantage points that we have. So I feel like the regulator could still be the hosting person, and then the rest of the players are sufficiently feed into that.
So, I agree with you, Sheila. And the way we look at it in our conceptual framework for a responsible digital finance ecosystem is that we see the Financial Consumer Protection Authority, or the Market Conduct Authority, therefore, the regulator and supervisor for financial consumer protection, as the anchor. And they really have a mandate to monitor the market using, all the tools we've been describing today. But when on top of this, you have, consumer association, industry associations doing this kind of work, I think that's where you really get the, maximum sort of, power to resolve DFS consumer risks issues. I see a lot of exchange on the gender aspect. Willie, do you want to mention some of the comments on gender?
No, I mean,
everybody can see them, I guess, except me.
True. I have nothing more to add.
I'm the only one who cannot see them.
I agree with both of them. One thing that I will quickly plug is this question of gender and consumer protection is something that we're very interested in exploring further, and we're putting together a convening that's going to focus on trying to map out the sort of research agenda that we should be focused on in the next 4 years of our consumer protection research initiative. And so that's going to be happening probably next month, and we'll be putting out some sort of output from that event that will hopefully sort of set the agenda for us and our initiative on what topics are most important for us to be exploring here.
Very good. Yeah, no, I'm really interested to continue this discussion on gender, in particular, I think beyond the notion of complaint, where it is very likely that women in many, many countries will not complain as easily and as, as men. But I think the question for me is a bit more also on these national surveys, whether there is a bias when people respond to the questions. And that, I think, is something we need to dig in and also look at whether this is something that is happening in other fields than finance, because IPA has experience in many domains of, conducting national surveys. So it would be interesting to do a bit of a cross-analysis with other sectors on this front, because I think that's something we need to explore more and understand better if we want to make progress on this front. We have 2 minutes left, unless there is any more question. Oh yes, commitments. Anything that you want to commit to doing in the next year? Sheila, Sarah, and we'll also say something very quickly. Like
yeah,
30
I think
seconds.
we're committing to ensuring that we are in the right committees with the right people, and that everyone is on board around consumer protection. And that we're all collaborating. So really, that's the main one, but also digging in deeper into the voice of vulnerable consumers.
Thank you. Sarah?
Yeah, for us, it's making sure that our associations have access to the data, some of the tools, and are really championing what can be done at the industry level to fair and transparent practices for consumers.
Willie?
I've said it a bunch of times already, so I'm going to say it again. We're going to do surveys in 10 countries. So you heard it here first. Come back next year at Financial Inclusion Week. We'll have a presentation sharing the cross-country results from 10 countries.
Very good. And I commit to hold you accountable for what you've just said, all of you. And I also commit to launch, this responsible digital finance ecosystem on the ground in 2 countries this year. Thank you so much, everybody. Thank you, CFI, for organizing, and hope to see you very soon. Thank you. Bye-bye.
Thank you. Bye.
Thank you.